Okay, I think my video one got a little cut off, but that's okay. I'll explain some more stuff here in these videos. Basically, I'm going to explain the tables here as best as I can. This is table one. Again, this is posted to Blackboard. I mean, use this to answer your questions. I mean, actually put in your answers right here. And that'll be easy for me to grade, and you know exactly what to do, and then you don't have to type up all of this. Question one, again, asks for complete the 1992 columns. So that's of tables 3 through 6. So here's the common size balance sheet. And all you do on a common size balance sheet is base every one of these items on the largest item on the balance sheet, which would be total assets or total liabilities and equity. So going back to the table 1, 1992, all you have to do is take each one of these items, like the 6550, divide it by the total assets, and that will give you 5.13%. So do that for all the missing items. Table 4, same thing with the income statement. Go back to the income statement in table 2, and for the income statement you base it on the largest item, which is net sales. And you can kind of see there it's got net sales as 100%. So take every item, divide cost of goods sold divided by net sales. So what percent of is cost of goods sold of net sales, and that will give you the 82.18%. So that's all you got to do. So it's just simple math. You don't need to show me the calculations. I think maybe the case kind of says to make sure it'd be most embarrassing if you don't know where the numbers came from. I'm just going to assume if you have the right answers in here, you did the simple math correctly. So don't worry about explaining it. Just fill in the tables, and for tables 3, 4, 5, and 6, and that'll be enough. You don't need to do any explaining at all. Same thing for the ratios. You don't have to write down the ratio and how you calculated a ratio. As long as you fill in the table here, you'll be fine. So there's not going to be a whole lot of write-up on this case, except for some of the little bit later questions, the concept questions. And then again, as question 2 states, just based on the information in the case and the results of filling in the 1992 columns, then analyze the company. How are the ratios doing? Are the trends going up or down? These numbers compared to the industry average, how do they look? With the common size, you can kind of get ideas. Is there inventory going up or down as a percentage of total assets? Is there cash going up or down as a percentage of total assets, and so on and so forth? So from that, you can analyze the company and see if it's doing well or not. So that would be question 2. Just list their strengths and weaknesses. And then question 3, again, just based on those strengths and weaknesses, should the banks loan the company money? So just based on their 90, 91, and 92 information, not the projected stuff from tables 1 and 2, is the company in good shape, and should the bank continue to loan the company money? Then question 3 says, now complete the tables, basically tables 1, 2, and 6, the pro forma information. And this is where it gets kind of tricky. This is where you've got to use the case information to find out what they project these numbers to be. Like for instance, the case states that in 93 and 94, they predict cost of goods sold will be a certain percent of net sales. So from that, you can calculate cost of goods sold. And then, like I said, this is just, some of these numbers will just be adding up the columns or subtracting one number from another number. So this really gets into, do you know how to use the financials, and if you know how the income statement and balance sheet are related, to carry some numbers over from the income statement to the balance sheet and so forth. And again, for question 4, make sure you read the question. The question itself gives you some vital information you need to be able to fill out the income statement mainly, and the balance sheet also.